Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my podcast partner, Don Durrett, founder of goldstockdata.com. Don, welcome back.
Yeah, John, I'm looking forward to Highlander. I like this company after they acquired Bear Creek. Are currently attempting to acquire Bear Creek.
Right. Both of us are Bear Creek shareholders in full disclosure. It's a very interesting story, and especially with silver doing what it's doing here, anything in the silver space is just there's tremendous opportunity here. And we always thought, you and I, that Karani was a really nice asset, and now we're gonna see that possibly go down the road here. I mean, obviously, another disclosure that any company that's trying to get into production, there's never always a clear path. We've seen that happen many times where things are meant with good intention, but that don't get there. However, this one's interesting because it's been out. Karani's not a secret. It's been out there for years and years, and it just needed a company like I think Highlander to come along and take it down the road here in the hottest silver market of all time. Hey Don, let's start with some names before we introduce Highlander and Dan Earle. Just looking through my silver picks right now, I'm doing my year-end holdings and wanted to rename a few names for people in no particular order here. If you want to sign up for our services, you get exactly what we own and what percentage we own it, and we provide all of our holdings. So we're very unique in that regard. We're not, giving you our top 10 holdings. We're giving you the whole portfolio. So we encourage people to go to fenneckconsulting.com, go to subscriptions, and then the mining report gets you all of that. We also have a newsletter and some other services on there. So Aftermath Silver, Don, you and I just talked about it recently. I talked to the company right around probably 2 weeks before Christmas, and they were contemplating doing a raise, and they did a $15 million raise. 10 of that went to Eric Sprott, and then they upsized it to 20 million. So there's another silver junior that really is completely cashed up here. They're building a team in the field that could put something into production, whether it's silver or manganese. It doesn't really matter. Both are extremely valuable minerals, and they have a ton of both of those commodities. And by a ton, I mean, they've just disclosed in a public document that 144 million ounces of silver exist and a lot of manganese at 99.9% battery grade exists. And when you do the math, that gets you to over 800 million silver equivalent. So when you talk about, companies saying, we have 100 million ounces of silver equivalent or whatever, that's really great. But 800 plus million ounces, trading at 77 cents US. I mean, it's like this thing is just getting going, I think. And I mean, I know you like it as well.
Yeah, it's a bit of a long term. I mean, we don't even have a PEA on it yet, but I've held it. From my standpoint, they were calling it manganese. That's what these companies do. The metal that has the most revenue usually gets the focus. I see that, kind of the norm, if you will. But I always knew that at a certain point, silver was going to pass it up, and we're there now. Now silver revenue passed the manganese up. So it's a silver mine now. Hopefully they'll start calling it a silver mine. This is what I've been telling Mike forever. This is a silver mine. Quit calling it a
Right.
manganese mine. But they would.
Yeah.
So when people realize that this is going to be one of the lowest cost silver mines, I mean, the cash cost on this thing, I mean, is going to be unbelievably low, depending on manganese they produce, because this thing has so much manganese that they're worried about creating a glut in manganese. That's how much it has. It's kind of insane.
Yeah.
So yeah, it's an exciting story, but again, it's a long term. They don't have a PEA out yet.
Yep.
It's kind of 5 year down the road. And this cycle, we don't know how long this cycle is going to go. But I think that as we get, into 27 area, I think these development projects are all going to start getting a lot of, because then people are going to start looking out to see, okay, how much, if these things get into production, how valuable are they? And that's what we saw from 2004 to 2009, 10. We saw these development projects get valued at the same level as the producers. And I think that's going to
Yep.
come back here. So I want to own developers. I saw a private equities fund his allocation today, and he had 50% in developers. And I said, that's a little aggressive, but I like it. I like it,
Yeah.
because the developers are going to do extremely well.
Well, let's talk about another one then. We just had Andrew Pollard on the show last month from BlackRock Silver. This one is in the U.S. here where we are. It's in Nevada, 108 million ounces of silver equivalent. He told us on the show that he could be seeing hard hats in the field in 18 months from last month, so 17 months from today. He also commented that he's the number one silver junior in the U.S. in terms of benefiting from Trump's executive order, which is fast tracking companies and really putting money behind metals that are on the critical minerals list, like silver. So, what is your take on that after the interview?
Yeah, I really enjoyed the interview. I was very surprised. I owned it at one time, made money and sold because their CEO is a finance guy and their chairman is a geologist. And I'm like, they're not going to build this thing. They're just going to sell it. And then Andrew comes on and goes, no, Don, we're going to build it. And I'm going, oh gosh. So I wanted to buy it, but it kind of got away from me. The market cap's up to 400 million. It's not pricey, but I'm currently kind of looking for 10 baggers.
Right,
For instance, we had Western exploration on our last time. Today
right.
it came out. It's up 50% in one day. It's exactly what I
Yeah,
predicted. I said that your market cap is 30 million. As soon as you tell this story, as soon as you let people know what you got, it's going to go to 50 million. It went to 46. It almost hit my number. It probably will hit my number in the next month. Because that's the third stock we've had on. It was kind of under the radar. No, people didn't know what the heck it was, and they go, "Oh wow, look how cheap that thing is." We did Paramount Gold
yep,
Nevada when it was uber cheap, and we
yep,
basically um, and it went up 50%. And we had 1911 on, and it was like it was uber cheap, and it went up 50%.
right.
1911, by the way, Paramount seems to just keep going up because their Grassy Mountain project is basically permitted now. And so it's starting to really, it just trend. 1911, it's had trouble. I mean, it went all the way all US. Today it's down to 68 cents. It's literally it's underperformed, and people are like, "What's going on with 1911? What's going on with 1911?" I get a lot of emails. Well, I mean, if you go back like from August to now, it really hasn't done much, and everybody else has doubled. But it's got a market cap of 220 million. And people are like, I don't want to pay more than that for it. I'll pay 30 million for Western exploration, but I'm not going to pay 220 for. So it basically hit a valuation. It hit a valuation people aren't comfortable. But they came out today with a news release giving guidance for what they plan to do in 26.
Mhm.
It's potent. It's potent. We're weeks away from a PEA. That's all we need. We don't have feasibility. We just need to scope this thing a little, how we're going to turn this thing back. This is what we're going to revamp the mill, basically do some infill drilling, figure out where, do some exploration, and then we're going to restart this thing Q1 27. And the stock moved. It's like, can't you guys read?
Well, we did see the futures get pretty, you know, hit overnight. Gold was down well over 1%. Silver was down over 5% at one point, and both rebounded all day, which again is really, really positive. I mean, you and I have been doing this for both over 20 years, and you don't see this kind of resilience in our sector. When something's down, it can stay down all day. And this is in the face of everyone saying over the last week into this week, oh, you've got Bloomberg indexes rebalancing and all this stuff happening, and nothing's happened.
Yeah.
It's really amazing. Before we move on, Don, I wanted to just give people symbols. So we talked about Aftermath, AAGFF, BlackRock, BKRRF. We talked about Western Exploration, WEXPF, Paramount, PZG in the States, and oh, of course, 1911, AUMBF. Go ahead, Don.
Yeah, I wanted to just talk a little about silver, gold, the resiliency here. Um, I've been saying that it's all about gold. This is all about, it's not about silver. This is all about gold. So gold's at $4,600. It was at $4,300 January 1st. So it was up $300. Silver's just coming along for the ride, but gold is basically the leader here. And the reason why gold is doing so well is because there's a lot of uncertainty. You look at like the global, all this global friction that's going on. What happened in Venezuela, what's happening in Iran. This global
Right,
friction, that is what's been driving gold. And people don't really understand what's been driving gold. It's not inflation. I've always said this. It's not inflation. This is all about uncertainty. People are hedging.
right.
People are moving away from the dollar. They're moving away from bonds. It's causing uncertainty in the U.S. bond market. It's and in the U.S. economy is 23, 24% of global GDP. It's literally it's the largest economy. It's bigger than China. China's kind of close, but the US is the biggest. And the US has problems, but everybody's in denial. And so gold, $4,600 today is lot, and the S&P is the leader. The S&P is the most important. And so the S&P, it's almost at an all-time high, 69.45, just knocking on the door of an all-time high. Dow's almost at 50,000. These are both, knocking on the door of these all-time highs. But simultaneous to that, you have Wall Street basically saying everything's fine. Everything's fine. Well, gold is saying not so fast. Everything isn't fine. And then silver just going, okay, it's time to come along for the ride. And now that silver's come along for the ride to become a monetary metal, you have investors that want to own silver. And guess what? There's not enough of it. I've always said this. When investors want silver, there's a problem. There's a problem. And in March, and this is why silver's at 90, has a spot price today at 92, starting the year at 70. So it's up almost 30% in 2 weeks. The reason why is because there's not enough physical silver. Now they're talking about March being a big problem on COMEX because all the open interest, all the potential deliveries in March. It's going to be a big, 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 big delivery month. We're looking at around 25 million to 30 million ounces of delivery just in January, which is not a big month. So we're looking at 50 million ounces of delivery in March. So all hell is basically kind of breaking loose on the silver front, but it's all about gold and it's all about the S&P, and silver's over here creating all this drama. Silver's the drama queen. Silver's is the female energy. Gold is the masculine energy, and silver likes to stir up the pot and create all kinds of drama. But we're having fun watching silver, but silver's going to be very volatile. It's not going to be
Yep,
a straight ride up, whereas gold, I think, gold is the buy the dip asset right now. It's the buy
right.
the. We don't have to worry about 20% corrections in gold this year. It's not going to happen. 15% is like worst case, and that's probably not going to happen. It's probably going to be 8, and that's going to be short lived. So there's not a lot of. The irony is, well, why aren't people buying gold miners? It's like there's no fear there. They're generating boatloads of cash, and Wall Street's like ignoring all the gold miners. That one's weird to me. Now I understand the silver, being afraid of silver. I get all that. I don't understand that one, but ignoring the gold miners, Newmont trading a free cash flow multiple under 10. That's insanity. I mean, Wall Street's kind of lost its mind, but I think it's lost its mind thinking that there's no recession, on the horizon. Sure, there is.
Yeah. Well, it goes back to what we've been saying on this program for 2 years now, which when there's a distraction out there, meaning Bitcoin's rally since Trump got into office last fall, right? Or, not last fall, the previous fall, trading at 70, 71,000 back then, and rallying sharply about 30% right away, right? Then technology and AI continuing to move forward. Really nice year in the S&P, NASDAQ, and Russell last year. Real estate continuing to do well, right? Like despite people saying real estate's going to blow up, it hasn't blown up in the US. So these are distractions to people getting involved. When you add up the market cap of all of the mining stocks that we follow, you and I, right? Like you have 850 on your website. I follow about 200. I mean, that's 1,000 names, let's call it, right? You add them all up, they don't equal one of the top 50 stocks in the S&P 500's market cap, not one. And that's how little known our sector really is, and that's the opportunity for me, because when I can get more of my bigger clients and friends into this sector, like I said on many shows last fall, I've never had so many people contact me since September, October last year, of people I used to work with 20, 25 years ago. Hey man, I saw you tube, or I saw you on this podcast, or heard you on this radio show. Like they're getting interested, Don. Like the generalist money is getting interested, and some of these people that I know on the financial advisor side manage 1 to 5 billion each. Like these players in the financial world. And if they're getting interested, it's a matter of time before we see, that 0.1% of the global, stock market that our sector is turn into zero point 0.2 or 0.3%.
I just have one quick comment, and then we'll bring on Daniel. If you add up the market caps of all the silver miners, it's $200 billion, which is a pimple. I mean,
That's crazy.
it is so small. Yeah, there's no room. And if people go there, and there's only three silver miner ETFs of any size,
Right.
if those
Yeah.
three, if people go into those ETFs in a big way, the silver miners are just going to go just explode, because that's what they have to go and buy all these stocks. I mean,
Yeah.
it doesn't take much. It's not going to take much to move these stocks up, and most of them are small juniors, so it takes very little movement. I mean, like today we saw Western Exploration. They had a $30 million market cap with a tight share structure. And that thing just exploded today, up 50%. It doesn't take much to move it.
Right. So those three ETFs that Don is referencing, the small to mid cap version is SILJ, and the two large cap versions are very similar. I've owned both for years. They're SIL and SLVP. With that, let's leave it there, Don, and bring our guest on, Dan Earle, CEO of Highlander Silver. Dan, welcome to the show.
Thanks for having me.
Yeah, of
Hey,
course.
Dan, you're a young guy. I didn't expect that. What are you, 40?
44? Does that qualify as young?
Absolutely.
Sure it does.
Absolutely. I'm an old timer.
All right, I guess for the
But
money.
if you've been in the mining space, Dan, then
Yeah.
you probably are like 100 internally,
Age doesn't matter. Age doesn't matter to me. Montage has a young, you probably met him, he's a really young CEO, and I like him a lot. So I don't have a problem with youth.
Yeah, we need more youth in our sector.
We
Yeah.
absolutely do. So Dan, why don't you give us maybe a 7 to 8 minute overview of Highlander and what the opportunity looks like?
Yeah, absolutely. My pleasure. So Highlander, it's a TSX listed stock. We're working on the NYSE listing, but it's purely a TSX listed stock at the moment. We actually, just before the break, we announced a combination with a company called Bear Creek Mining, which I know the both of you are shareholders of that company. We're hoping to close that transaction the end of February. When we do, we'll have a combined market cap of about $850 million US dollars. And we'll still be well funded. We'll still have about $60 million of cash and no debt on the balance sheet as a combined company. And this company is backed some of the most successful investors in the mining sector. So collectively, you've got almost 60% of the ownership of our shares just with a few strategic investors. And so these would be the Augusta Group. We're part of the Augusta Group here at Highlander Silver. Board and management from the Augusta Group own about 36%. And the Augusta Group, for those of you who don't know, this is a specialist in the niche of exploration and development. Our strategy is always the same. It's about surfacing the value. Typically, we end up selling these companies, but we certainly do have operating assets, and we built assets as well. And we've got a track record over the last dozen years of $4.7 billion in exit transactions. So Augusta Group, and then we've got the Lundin family. These are our key outside strategic backers. They own just under 20% of the company. I'm actually going to go see them tomorrow and get them a good update on the story. And then finally, Eric Sprott, no description required there. He's just under 5%, but hopefully he grows that position with his acquisition. I mean, we're adding the largest permitted silver asset in the world. I have a feeling that that's going to appeal to Eric. And basically, we've got a portfolio here. So we're focused on silver. There is a gold asset. I'll just get that out of the way right up front that comes in with the acquisition. This is an asset, operating gold mine in Mexico, produced about 40,000 ounces, and another 200,000 ounces of silver in its last complete year in 2024. 2025 results will be out soon for that asset. It's non-core to our strategy. We're focused on silver, obviously, but it will be part of the portfolio. The silver portfolio, really two key assets. Both of them are located in Peru. Peru, for those of you who don't know, is an out and out. It's a mining country. It's actually like a lot of the Latin American countries. They're going to have elections where it's looking like it'll be a swing to the right, which will be helpful. But even this year, we've seen activity in M&A. Glencore has bought an asset. Glencore apparently is about to be bought by Rio Tinto. Fortescue, another major, they bought an asset in Peru. Rio 2, which is a gold company, bought another asset. So this is a mining jurisdiction that the companies continue to make investments in. And we've got two assets. I'd say the foundation and the original asset for Highlander was our San Luis gold silver project. This is a bonanza grade gold silver vein system. It's actually the highest grade project in either gold or silver if you look at it. So the resource grade here is 24 grams of gold plus 579 grams of silver. So just extraordinary grade. We've been growing the project in a discovery area we call Bonita, and we've had some barn burning drill results. Go have a look on our website. 20 meters plus, 24 meters, 25 meters, 20 grams gold, 15 grams gold, 12 grams gold, plus a bunch of silver to go along with those. And that's a growth area that we're really excited about at San Luis. And then obviously the focus of this acquisition, I know the reason you guys are invested in Bear Creek is the Corani asset. And this is the single largest permitted silver asset in the entire world. And just an extraordinary value. Silver equities in general, you guys were talking about investors not paying attention to the equities. That's absolutely the case. And you can see that in the multiples. So silver equities are trading at about a quarter of the multiples that they got to in the prior cycles. And that's on a basis where these assets are being valued at $40 silver. That's where the analyst decks are at. Nobody is looking at projects at $60 silver, $80 silver. That's all pure upside from where they are. With this acquisition, we're adding something like $14 a share of net asset value. Okay, and we'll have a portfolio now with $20 a share of net asset value. We're trading under $6 a share. The peer group is in and around 0.5, 0.6 times net asset value. So we've got to double just to get in line with the peers. And like you guys were pointing out, the entire peer group is incredibly inexpensive relative to the historical multiples. So there's a lot of upside to come just on a re-rate when we get this transaction closed, get out and start telling the story. We've got a lot of news flow to come. There's some key executive hires that we'll announce probably with the closing of the transaction. Two very experienced technical services professionals for our Corani asset and another one for the asset in Mexico to build up the team. I think that'll be really, really important. It's the people that make these projects happen. We'll get an update out across the portfolio once the transaction closes and we're able to provide that information. The NYSE listing that I mentioned right at the outset, we're expecting that we'll be up and trading in the United States. This is the most important market in the world, the deepest pool, the wealthiest investors. Can't overstate how important that is for a Canadian listed company like ours. That'll probably be a mid-March event for us. We're certainly looking forward to that. And then one thing, if people noted in the press release where we announced the combination with Bear Creek, we're actually funding them via private placement. Before the transaction even closes, we want the company to get started on, the expiration or restarted on the expiration of this project, which, it hasn't seen it in So we want to provide for geophysics to get by the end of January, drilling by the end of February, so we can get going on the growth opportunity, which is still a huge growth opportunity with the Corani asset, despite the size of it at over 400 million ounces of silver. And you guys mentioned indexes. This is absolutely a dominant factor, especially in the silver equities, but the gold equities as well. We're entirely outside of the indexes. We're not in any index. We're expecting that we will be added to those indexes beginning in April, and then another one in May, and then a further series of index adds after that. And if you look at a company like Discovery Silver, I'm sure you guys were well familiar with that company and the series of index adds that it experienced last year. What kind of performance that can catalyze, and we're looking forward to that in the first quarter as well. Yeah, I'll leave it there. We can get into more details later in the presentation.
That's great, Dan. Nice job. So in particular order here, um, with something that is just curious to me because Mexico is so hot in the news right now. Is that gold asset in a good state in your view in Mexico? And do you plan on, you said it's non-core, so do you plan on disposing of that in 26 or 27?
Yeah, it's non-core to our strategy. We don't have a need to sell the asset. But we've got so much on the table in terms of the opportunity to surface value to deliver growth with the two existing silver assets that we have in Peru. And quite frankly, we're more bullish on silver than we are on gold. So that's where we want to allocate our capital and our time. But having said that, there's a large opportunity with the gold asset in Mexico. It's located in Sonora, which you guys will
Oh,
be well
wow.
familiar with. It's very close by to Silvercrest Metals asset
Yep.
is in the same district. That was acquired by Coeur in a transaction that closed in Q1 of last year. So you're in the same neighborhood with this asset. There's a lot of value to be added at that asset. Even just bring it into line with the comparable operations in the district would unlock some big cost savings and production enhancements. But look, it's a hot gold market. There's a lot of companies in Mexico. Virtually every company now has cash to grow. If someone comes to us with an offer that we can't turn down, then we'll be disposing of this asset. So non-core for us, but not certainly not desperate to sell the asset given what's available there.
Yeah, Sonora State's my favorite part of Mexico. I mean, Don and I are both in Arizona, and that's very close to the Arizona border there. There's a lot of new interest in that part of Mexico since Silver Tiger got their open pit permit in November. And we own a lot of those names, both Don and I, discoveries down there as well. Let's talk about Peru, because I mean, people, are probably wondering what's happened since Castillo because Castillo was such a mess. And we got really interested in Peru during that time because we said this is going to turn, because Don and I are both value guys. And when Castillo got jailed, it sort of just was like an aha moment for me, like to say we got to put more money into this country. And we own some projects there, Silver X. We just interviewed Exelon, who's got a new silver project in Peru. They're working on putting back into production this summer. So, tell us when the elections are and kind of like what is the vibe in Peru these days?
Yeah, well, look, you touched on something that's really important, which is the political context. And the important thing is that in Peru, you have something like 2 decades of it being an exceptional growth jurisdiction for the mining sector prior to Castillo. And Castillo is only in place for about 18 months. And the way to understand Castillo is that he's a reaction to the kind of the pandemic, which really upended things. And the reaction that we saw in Latin America was the election of these kind of socialist type governments. Okay. And so it wasn't just in Peru, but it was in a number of countries. You saw the same thing in Chile, which was, has always been considered, one of the top mining jurisdictions in the world alongside Peru. And yet they elected a socialist government, which impaired, the investability of the asset for a brief period. And so Castillo lasted about 18 months. Once Castillo was out of the way, the investment dollars started flowing again. And these are, mega projects. Peru is elephant country. So these are multi-billion-dollar projects that started getting back on track once Castillo was out of the way and order was restored. Now, we've got elections coming in April, and it's a wide field, but the top three candidates would all be, conservative candidates representing, some degree of swing to the right, which will generally be favorable for the mining sector. So whether it's far to the right, or center right, that's the result that you're looking at. They would represent about 25%, collectively in terms of the polling. The next highest candidate, before you get down to, a centrist or a left-wing candidate, the next highest candidate would be under 4%. Okay, so it's going to be a swing to the right. And this is a theme generally for Latin America. You're seeing, obviously, it's well publicized in the United States, what's gone on with the election of Milei in 23 in Argentina. But you've got other jurisdictions as well. Honduras, Chile recently, Bolivia, where you're seeing this trend, back to, fiscal sanity, economic sanity, pro-business environments where, you can put in place policy that's going to generate wealth for the citizenry. So I think, look, there's a lot of people that are going to be re-engaging with opportunities in Latin America. For us, we found some gems here in this Bear Creek combination.
Great answer. With that, I'll turn it over to Don.
Hey, Daniel, I like what I'm hearing here. This is great. First thing up, you start off talking about the value of your company. That's what investors want to hear. We want to hear that you recognize that, and you recognize that your company has a lot of upside. For you to start with that, that's great. Then the other thing you said that I really like was that you said that there's value in Mercedes. I agree completely. Now, most companies tend to be, it's odd, it's very ironic, but they tend to be conservative in this business. And they're like, oh, Mercedes is a high cost mine. We don't want anything to do with it. We're going to divest it, But you're like, wait a minute here. This thing has some potential. If you think in terms of what gold's doing today, it's at 4,600 and it's trending higher. So if Mercedes can produce 30,000 ounces a year, if gold keeps going up, it can have free cash flow anywhere. Let's say it had a $2,000 margin. If we get the $5,000 gold by the end of the year, it's probably gonna have $2,000 margins. That's 60 million in free cash flow, and it could go higher than that. So gold goes to $6,000. Mercedes generates $1 million in free cash flow. It's a small little mine. You kind of understand it. You do a little bit of exploration. That's a lot of money, 90 million a year. I wasn't really excited about Equinox selling their Brazil properties, 250,000 ounces, and they sold it because they basically said it's too high. The costs are too high. I'm like, yeah, maybe they're too high today, but what about in 12 months? Free cash flow is free cash flow, and you want to have as much as you can get your hands on. Costs have always been an issue when the price of gold was low and you had low margins, but when you have huge margins, cost, you have to start looking at it from a different angle. So I like the fact that you guys are open-minded to the potential Mercedes, because if you sold it today, I think you wouldn't even get 50 million. You might get 35 million. That's about all anybody would pay for it, right? So it's ridiculous. You can't really sell it right now. I get that. Okay, so now I want to go to Karani. So the one question I think a lot of people have, you might not be able to answer this since you don't own the project yet, but maybe you can give your opinion, is your strategy. A lot of companies, when they do acquisitions, they basically start over. They're like, okay, yeah, they have a feasibility study, but we're going to bring our own team in and we're going to just start from scratch. We're going to drill this thing. We're going to get a better understanding. And there's basically three approaches here. One approach is you get really aggressive and you're confident in what they've done so far, and you get this thing into production ASAP. The second one is, okay, we kind of like the project, we like what it's currently doing, but we're going to do some infill drilling here. We're going to make sure that we're comfortable with it, and then we're going to go forward. And then the third one is what I mentioned earlier, is that you're kind of start from scratch. So right now, what are you going to choose, A, B, or C?
Well, look, it's kind of a combination of those things. I'm cheating here, but that's the truth of it. So part of it is starting from scratch because you need to put in the baseline of expiration, and that just wasn't done here. I think part of the story is just the technological limitations. I describe the use of drones now in exploration for these high elevation projects as a technological breakthrough in our industry. Because you simply cannot fly geophysics with a helicopter at high elevation. It's impossible to do. But now with a drone, never mind at 4,000 or 5,000 meters elevation, you can fly these drones at 8,000 meters elevation, 9,000 meters elevation. You can circle around the top of Mount Everest, with how much thrust these drones are generating relative to the weight. And so on a project like this, the first thing that we're going to do before the transaction even closes is, for the first time ever on this project, we'll put in place, geophysics across the full property. So we'll start flying that before the end of the month here, and then we'll add ground-based geophysics to that to help define the growth opportunities with this project. And like I said, this is already 400 million ounces of silver, but there is still a very large growth opportunity. The footprint of this deposit has not been fully drilled off. And so the geophysics is going to help set up those targets for us. And then in February, we'll actually start doing the step out drilling. And what we're focused on, and I'm going to tell you a little bit about the strategy, in a moment around how we configure the project and how that's different than the 2019 feasibility study. But one of the things I want you to understand is that there's high grade optionality within this 400 million ounce deposit. And so in particular, there's one zone called Karani Este, so Karani East. And this resource, if you were to look at it in isolation, would be 70 million ounces at 140 grams of silver. And I mean silver, not silver equivalent. 70 million ounces at 140 grams silver. That's like the grade that some of these Mexican underground miners are mining in narrow veins underground. And here you've got an open pit where the mineralization is outcropping at 0 meters depth. Okay, and so we'll be stepping out. One of the last drill holes, so the last section line, the limit of drilling. You have a hole which is 58 meters of 229 grams silver from 0 meters depth, and there's no drilling beyond that. Okay, and so these are the kinds of holes that we'll be stepping out from to grow this deposit, but grow it with high grade. So this isn't about adding low grade to generate growth or dropping the cutoff grade. High grade growth is what's on offer here, and we want to kick that off with drilling in February. Okay, and it's that high grade optionality that lends itself to a creative approach around the configuration of the project. And so the way that I would equate this is similar to like an Artemis Gold type strategy. This is in US dollars, this would be about a 7 billion market cap company, Artemis Gold. And they took a project that's much like the gold equivalent of what Karani is to silver, Blackwater is to gold. So it's a large, relatively low grade project, but then with the optionality and the grade distribution, it lends itself to a staged approach where in the first phase, you zero in on the high grade. Okay, and then you enhance the internal rate of return, the return on capital of the project. You bring down the capex of the project. So the 2019 feasibility study had over 500 million of capex to build a full-scale project. With this staged approach, we want to lower that number. So inclusive of inflation and everything else, we want the number to go down in terms of the capex, and we want to maintain the types of returns on the project. So we look at things a little bit differently than the way that Bear Creek did.
Boy, you're really talking to the choir here. I've always believed in phased approach. I always believe start small and then grow the company. Don't try to, have these big capex. I remember I was Spanish Mountain. I talked to them, and they were going to do $920 million capex to start the project. And they were arguing that was that they had to do it. And I'm like, you don't have to do 920 million to start it. But that's their approach. And I disagreed completely. I'm with you. I really I bought Blackwater at the very beginning. I really like that. It's worked out really well for me. I really like the phased approach. I bought your stock, the minute you guys, well, I own Bear Creek, but the minute that you guys did the deal, I tweeted out that this is something that helps both companies. The thing that was beautiful about this deal, we haven't really talked about this. The thing that was beautiful about this deal is that Bear Creek, they went and they did a deal with a company that had big upside. So your company wasn't pricey. They didn't go to a large mid-tier. They went to a company, a junior. You're basically a junior, and said, look, if we do a deal with these guys, they're going to be able to build it, and you guys aren't going to get hurt, right? That was the beauty. But where we will get hurt is if what you said earlier, which is the only red flag of this conversation. You said earlier that your company, the Augusta Group, likes to sell their projects, doesn't like to build companies. But you're a young guy. These two projects, San Luis and Karani, are company builders.
Absolutely.
You could build a very large company. So I hope you fight with the board and say, don't you even think about selling this thing.
Oh, well, listen, you'll see with the executive hires that we have coming through, top level technical services professionals that have built mines in the Americas, in Peru. We're serious about moving this forward. This is the kind of when we're so bullish on the economics of these silver projects in this silver structural bull market that we have. This is where we're actually oriented around taking these assets to production, and it's well within our capability to finance these projects. This is not.
Yeah, I'll cut you off there. Sorry to cut you off, but I think that goes without a doubt. Otherwise, Bear Creek would not have sold to you. When you guys were in discussion with them, they're for their shareholders. They're looking out for their shareholder interest. They're not going to sell to a company who's going to turn around and flip it, and rug pull their shareholders, right? So when they sold it to you, when you sat down in the conversations, you're like, yeah, we'll build it, right? I mean, that goes without saying.
Oh, absolutely. And credit to the Bear Creek team for recognizing that potential. I told them on a transaction like this, you don't need a premium because we're going to get the premium in the market. I told them, look, this stock is going to double faster than you think it will. And you look, normally in M&A, what happens is that the acquirer, so you put a large premium on the transaction, okay, but then the acquirer's stock tanks, and then that premium doesn't look so great.
Right.
And you've seen that recently. I don't want to point names because I'm going to be seeing these people at conferences later. But if you look at the recent M&A in the silver sector, you see some great examples of that. This is the exact opposite. It's the rare transaction where, sophisticated investors with a lot of experience in the silver sector like you looked at it and said, yeah, this is a combination where you've got more than its some of its parts, and a mutually beneficial transaction. That's exactly, and we're at the beginning of that, but that's exactly what we thought that there would be potential for.
Right. The one thing that I recognize, I is the potential of the combined companies. It's absolutely huge. I mean, that's what I always look for. I like to get in early and then let the company grow. And this is a really, really good situation for that. I don't invest for 12 or 24 months. I'm more of a 36 to 60-month guy. Let the company build something and see where they're going. And so, yeah, this is a great story. I really enjoyed this conversation. It looks fantastic.
Well, thanks so much.
Yeah, thank you, Dan. And I wanted to point out on that last slide that you had, the other companies you were comping against all had PFSs and FSs from 2024 and 2025. So I think it's important as an investor to understand you're going to be using not $18 as a silver spot price, and that's going to affect all your metrics. Do you have a plan for being that was 2019? Do you have a plan for when that might get updated?
Yeah, absolutely. Look, I'm most excited about the growth opportunity. There's a very large growth opportunity, and we'll get started on that before we even get the transaction closed. Okay, but in the background, we'll be updating those studies as well. And like I said, I think we can optimize. We're not just trying to refresh the numbers, in the configuration and the scope that Bear Creek put out in the feasibility study in 2019. We're trying to optimize. And we could have those numbers out certainly back half of the year, but I think Q3 would be realistic. We'll have a comprehensive update out across the portfolio once the transaction closes, and that's when we'll nail down those details and make those commitments to shareholders. But for now, certainly back half, we'll be updating that feasibility study. We want to be in a position to start construction, beginning in next year.
I just have one final comment. I've been tweeting before Bear Creek got acquired. I tweeted probably 10 times. I basically tweeted and said, Bear Creek's having trouble with their CapEx, but that reason you sell this stock. You hold this stock and you wait to see what the outcome is, who buys it. And then whoever buys it, if you like it, that'd be great. And that's exactly what happened here. The buyer was a really good acquisition, really good combination. So the people that have been holding Bear Creek for all these years, they're going to get paid.
Yeah. Well, thank you, Dan, for joining us today. We're going to have the tickers in the show notes for everyone. Again, this has been Dan Earle with Highlander Silver. And Dan, if you don't mind just exiting now for us, we're just going to summarize for our listeners.
And maybe if I could just jump in and say, for any of your listeners that are going to be attending your conferences, we'll be at both conferences. So I'm really looking forward to engaging with anyone who can make those conferences.
Yeah, so that's going to be in May. Two great U.S. conferences in D.C., May 17 through 19, and then in Fort Lauderdale, Florida, May 20 through 22nd. We appreciate the support, Dan.
Thanks a lot.
Yeah, thank you. Thanks for being on.
So, Don, could you give us a brief summary here?
Like I said, I think that both shareholder companies lucked out here. This is a combination that just absolutely makes sense for both companies. Highlander was a bit of a pricey development company. I mean, they had a market cap, I think, $400 million for San Luis, which was small. So by acquiring Bear Creek, it really improved the company, and then vice versa. This was a really fantastic accretive deal for both sides. And I think we just sit back and wait and watch how Corani gets developed here. And this thing's going to really take off. He said their combined companies, 850 million, somewhere in there. I think that's really, really cheap. Just Corani alone, is going to be worth billions. And so you have this San Luis project that's also worth a lot of money too. So this is going to be a really good hold. I'm excited about it.
Yeah, me too. I've been talking about Corani for many, many years, as you have, about just being a monster silver project, and now that Peru has turned the corner, post Castillo, I mean, this is the time you buy this stuff. And for those of you that don't believe me, just check out Buenaventura's stock price. BVN is the ticker. I mean, they're kind of the belt for Peruvian silver stocks, and that chart is beautiful. So let's hope the same for the combination of the two companies here. Dan's very passionate about the acquisition.
Yeah, I like that.
Yep, me too. All right, well, we'll leave it there. Thanks a lot to all our listeners. Check out Don if you're in Canada. He's going to be there this month at both MIF and VRIC, VRIC.
No, I'm only going to be at VRIC. I'll be at MIF in Toronto in February.
Gotcha. Okay, so VRIC is I think around January 25 and 26. They used to do it like on a Sunday, Monday, or Monday, Tuesday.
I speak at 2:30 on both days. I think it's work group 2. Work group 2 at 2:30. Easy to remember.
Okay, well, yeah, definitely check Don out. He spoke at our conference not too long ago, and it was one of the best presentations we had. So, Don, thanks for joining us. Please check out Don's website, goldstockdata.com, and check out ours, FenneckConsulting.com. We appreciate the support, everyone. Have a great day.